Hello my dear investors. Fading consumer income and rising material costs are causing problems for many companies, but Coca-Cola is doing fine. In the recent quarterly report, management even raised the outlook for the current financial business year. Yet the stock is trading significantly lower than some months ago and offers a very decent dividend yield of 3.2%. Is Coca-Cola undervalued and the stock a buy right now? This and more I tell you in this video. Welcome again, my name is Thorsten, I'm the founder of Dividend Stocks Cash. We have more than 100,000 subscribed members and it's all about long-term investing to profit from growing dividends and capital gains as well. So let's have a look at Coca-Cola. Here it is. Management raised the outlook, as I already said. They think that the current business year turnover sales will grow between 10 and 11% and the adjusted earnings about 7 to 8% thanks to price increases of 9%. And price increases that just works. It works not only for Coca-Cola, it also works for PepsiCo, it also works for Nestle. For all these big consumer brands, they can increase prices and people still buy. Volume is not increasing that much. It might even be a little bit lower, but in some sales go up. So they have a good time or they can cope with the current challenges very well. Yet all these stocks somehow drop. For Coca-Cola and PepsiCo and Nestle, there's another reason called Ozempic or Wegovy. It's this drugs against obesity, and Walmart management said, okay, we already see changing behavior of people, patients taking these drugs. They don't buy that much food anymore, they buy and eat less carbohydrates. Yet management, for example, from PepsiCo said, no, sorry, we don't see anything yet. If we see something, we will adjust our portfolio. And it's exactly this what the consumer brands are doing all way long. They are always adjusting their portfolio. So in sum, I am not that worried about the outlook of all these big consumer giants. I am more concerned about current valuation, if dividends are safe, and which stock to buy. So I think that Coca-Cola is not the only stock I'm interested. There is another one I want to add here in this video, and you guess what? It's PepsiCo. Both stocks, I'm going to make a little bit bigger the screen so you can more easily detect the numbers. Both stocks are solid dividend payers. Both stocks are more or less slow growers, but there are slight subtle differences. And if you just want to buy one stock, I have a favorite and I explain you which favorite I have and even more important why. So both offer decent dividend yield, slightly below 3% PepsiCo and Coca-Cola a little bit higher with 3.2%. We have two dividend aristocrats. That's okay, that's fine. And then we have growing dividends as well, but they are slightly lower growing, less dynamic in Coca-Cola compared to PepsiCo. PepsiCo, medium single-digit dividend growth, about 6 to 8%, something between this in this range, and Coca-Cola about 3 to 5%. So there's already a difference. It means when you buy PepsiCo, your dividend yield on invested capital will increase faster than if you compare to Coca-Cola. And this is possible because of, guess what? More dynamic earnings growth for PepsiCo compared to Coca-Cola. So we have between 5 to 6% long-term earnings growth year by year for PepsiCo, and Coca-Cola it's less. It's between 2 and maybe 5%, depends on the range you take. The same is true for earnings, etc. And what's interesting is, although PepsiCo has more dynamic growth, valuation is about the same compared to adjusted earnings. Both have adjusted earnings ratio of 21. It's just 21.6 to 21.2. So it's nearly the same. Price to sales is different. We explained by different margins. Without knowing it by heart, I would say that PepsiCo has lower margins than Coca-Cola. Let's check. We have PepsiCo here with margins of 15%, and Coca-Cola has margins of nearly double as much. So this is why the price to sales ratio is double as high as PepsiCo. This is due to PepsiCo getting rid of bottling. They outsourced it to bottlers, to our companies, and thus decreased revenues but increased margins considerably. But this makes no difference, or this has no meaning in a way that Coca-Cola is the better stock just because margins are higher. It's about earnings growth, not about margins. Margins are one part of earnings, but not the only one. And the final result is earnings. We need to look at this. And the price to earnings ratio does that, for example. And also very interesting, we have here fair value calculations out of the box, taking the last 10 years and taking the average valuation of the last 10 years, comparing it to the current valuation, calculating delta and telling you if the stock is under or overvalued right now by this out-of-the-box calculation. And always if it's green and the number is negative, then it signals undervaluation. And you see signaling of undervaluation is much more given for Coca-Cola compared to PepsiCo, which is also interesting because this tells us that Coca-Cola in the past was higher valued than PepsiCo, although the earnings growth of Coca-Cola was lower. Let's check this using the adjusted earnings. This is adjusting earnings of Coca-Cola, and then let's add PepsiCo and have a look at this. And okay, what we see here is not a very clear picture, very similar valuation, but in the past, for many years, as I said, Coca-Cola was slightly higher valued than PepsiCo. It's just that within the last 12 months that this changed, and now PepsiCo is slightly higher valued than Coca-Cola is. And what's also interesting, if you look here, these are the estimated price earnings, and here you see that also PepsiCo, the blue line, is slightly higher, so a higher multiple. If we go into the future, into the estimates, we see that, for example, in 26 already, and even before, already in 25, already in 24, end of 24 even, that the multiple of PepsiCo will become lower than Coca-Cola because of more dynamic dividend growth. This is based on estimates. Here in this matrix, it was the past, but it's both the same, both tells you the same. The dynamic growth of earnings and dividends for PepsiCo is higher than for Coca-Cola, and still they are both nearly identically valued. So you already see I tend to go to PepsiCo. Let's check one more thing. Let's check the yield, the profitability if you invested in Coca-Cola for long term within the last 20 years. So you can do it by connecting the beginning of the stock chart in 2003 to today, and then you get an annual yield of 6.2%. So it means that Coca-Cola is even a slight underperformer compared to the general stock market. And if you look at PepsiCo, and we do the very same. So get rid of all this, and I save it. I don't want to click it away all day long. So, and then here you get an annual yield of 8%. So already higher. This is thanks to, guess what? Exactly, more dynamic earnings growth. So PepsiCo was and should be, according to estimates, the better stock in my point of view. Anyway, Coca-Cola attracts people because they like consuming Coca-Cola and they like the dividends. And here are the dividends. Dividends, I told you, 3.2%, which is much higher than in the last months, where dividend yield was as low as close to 2.5% only. And this 3.2% is not record dividend yield, but it's above the 5-year average, which is 3.05%. So from a dividend point of view, Coca-Cola is attractively valued. Is the same holds true for PepsiCo? Let's check out. Current dividend yield 3%, close to, although no all-time high. But we have here, in the past, it was a little bit below 2.4% even. Let's check. 5-year average was 2.8%. So yeah, the same picture basically as Coca-Cola. So dividends suggest that this stock is undervalued. Is it really undervalued? Let's check out first with Coca-Cola. We go back to the fair value. We use the adjusted earnings to get the fair value. Then we show the fair value here. We zoom in, and here we have the price earnings of 22.4. This is the average price earnings of the last 10 years, starting in October 2013. 22.4. Is this okay to do the valuation? The result, by the way, for the estimated current business here is $60 fair value compared to $56, so slight undervaluation. Anyway, we have here for the adjusted earnings estimated growth rates in the medium single-digit range, about 5 to 6%, and 22.4%. I think it's a little bit high. I would be more cautious in this for Coca-Cola, or more, not pessimistic, but I would go a little bit down, because in the past, let's check out, we had many years, here you see, of even decreasing earnings growth. And then we had some nice years, some bad years during Corona. And yet the stock was always highly valued with at least 20, multiple of 20. So Coca-Cola is always an expensive stock, I guess, because it's a safe haven for many investors. At least let's get it down to 21, the fair value. So we are, current stock price is close to fair value. And then let's check out what yield to expect till the end of 25. Then it would be 8.5%, which is higher than in the past if you invested for these 20 years in Coca-Cola. Because, why so? Because we have a little bit higher earnings growth than in the past. Exactly. Yeah, it is like this. Okay, we have to memorize 8.5%, compare it to PepsiCo. And PepsiCo, we do the same thing here. We use the adjusted earnings fair value. Here it is. We zoom in, and we have 21 as price earnings. Okay, average price earnings 21.6, so the stock is close to fairly valued. And then we have an annual yield expectation of 11% even. We see here this big, long range of overvaluation here, where the stock was overvalued. You should not have bought it when it was there up. And we have estimated earnings growth Now not in the middle or single-digit range like Coca-Cola, but it's already high single-digit range, about 8%. And so earnings growth higher, and this justifies, in my point of view at least, is 21.8 and not 21 like I did for Coca-Cola. So I would say 11.2% is okay. Even if you lower it to 21 to say we did the same for Coca-Cola, you still have 9.2%, which is still higher than compared to Coca-Cola. So, you know which stock I prefer. Yes, I prefer PepsiCo. And guess what? I have PepsiCo in my portfolio. And of course, it's no rocket. Don't expect too much dynamic. We also have the scorecard here. And this shows what Coca-Cola is for which investor it's suited. It is for dividend income. It's not so good for dividend growth. It not really shines. It is even less suitable for earnings growth. If you want earnings growth or dividend growth, we have enough stocks here in the screener which are much better suited to this. So the question was, is Coca-Cola a buy? Yeah, if you want, buy them. I would prefer PepsiCo. So, what's your favorite dividend stock? PepsiCo or Coca-Cola or any other? Just drop a comment below. Thanks for watching and see you next video. Bye bye.